Good afternoon. Okay, so today I've got 4 tips to help you with investing. This is to increase your investment returns. We've talked about it in previous videos that right now the market, what you're seeing in the market is a rotation from growth stocks to value. So we're going out of the high-powered momentum growth stocks that have dominated the market over the last couple of years, and we're moving into value now. And the reason why is because inflation is picking up. As inflation is accelerating, investors are wanting to put more of their money into companies that have pricing power, right? So even though prices are going up, those companies have the ability to raise prices too. They aren't squeezed by inflation. They're able to raise their prices too because there's enough demand. And with those 4 tips are, you want to make sure that you're investing in companies with a strong brand, that have good earnings, that have a good dividend policy if they pay a dividend, and obviously if they're paying that dividend on a regular basis and you see income as an important element to your investing, that's very important too. And then you also want to look at the sector. So again, brand, sector, earnings, and the dividend policy. I'm going to talk about each of these in a little bit of detail. The brand. You want to invest in companies that have a strong brand. And now I may mention individual stocks in this video, but I'm not recommending that you buy these stocks. That's not something that I really am supposed to do to people, the public at large. I can only do that if I'm consulting with someone privately. But just for the purposes of illustration, I'm going to use some examples here. So companies like Archer Daniels Midland, or Bunge, or Tyson Foods, or Kroger. These are companies that have a strong brand. They've been around for a long time. And you also want to look at what sector they're in. You want to say, is this a sector that is producing value right now? So for instance, I use some companies as an example that are in the food sector, right? So for instance, Tyson Foods produces foods for people to buy, or Kroger is a grocery chain. Walmart is a consumer staples company. If it has a strong brand, and you're able to essentially invest in a company like that, you're going to do well because that brand is probably going to last and have pricing power. You also want to look at the earnings. Over the last 10 years, have they always had positive earnings? Have there been any shortfalls? And why? Was it because of a recession, or was it because of some other reason maybe that could have been under the company's control? And then finally, you also want to look at the dividend policy. If they're paying a dividend and income is important to you, what is their dividend policy? Is it covered by their earnings? Have they raised their dividend over the years, and have they done it in a responsible way? If you take a look at these factors, these can be good for screening a company to invest in. Now, you can either buy the individual stock or you can invest in a mutual fund. Obviously, for most of us, I recommend investing in mutual funds or ETFs, not to put your money in individual stocks. But the idea is you can look at what that mutual fund or ETF holds and identify the companies in there to identify a good portfolio of value stocks to invest in, right? Because we want to put our money, when we're investing it, in value companies that have pricing power in order to maintain the ability to keep increasing your wealth during inflation. Please post a question or comment. Send me a private message if you want to talk about it privately. I always enjoy reading your comments. And until next time, I wish you unlimited success.